Raamdeo Agrawal to chat about what he's feeling about life post-GST. Raamdeo, it was Rexit, it was Brexit, now GST done with. But you've always been of the belief that when it comes to India, it's all about earnings. Yes. What are you feeling about the market right now?
Yeah, so we are in earnings season, which is more important than anything. Of course, GST is something which is very important. It will have deep impact in the individual companies' performances. But I think the real thing is that longer term, 2 years, 3 years, 10 years, I mean, will not recognize it is the same country. So the impact is going to be deep rooted, and the benefit is going to be the consumers and the country as a whole. I mean, it is not about any individual company's benefit. The ease of doing business will go down, or whatever is the benefit, except for few companies which can hold it, everything will be passed on. Nobody's EBITDA margin is going to go up unless you are somebody who don't care about what price you charge. He'll do it with a bag, that kind of guy. There are very few companies like that. I must say maybe one Pidilite, but their benefit will also be very little. Or how many companies are there who can say that? Say like ITC, they can say that I will raise the price irrespective of my cost structure. So there are very few, maybe 10 companies, but that doesn't make the market. Everybody else has to pass on. Like cement guys, steel guys, they'll benefit a lot, but everybody is in the competition, so everybody will have to pass on. So who is the beneficiary? People like you and me. So all the consumers will be beneficiary, and that will drive the economy. Things will happen faster, trucks will turn around faster, there will be a lot of definitiveness. You want to send something from, say, Mumbai to Calcutta, it used to take 10 days and uncertainty. Today it will reach in 7 days and certainty that yes, it will reach, because there is no obstacle by the authorities. Obstacle will be now your own vehicle breakdown or whatever. So those changes will happen. Say like when you use credit cards, so everything, your payment moves smooth. But if you just, but earlier when you are doing cash, I mean, it's a lot of hassle. You carry the whole bundle, give it to him, he'll give some changes. It is very slow.
Cumbersome, yes.
Yeah, but the moment is credit card, it moves very fast. So like that, GST will be like a credit card of the economy, and very large part of the economy.
What does it mean for the markets though? Because for markets, in the near term, it's going to be about earnings. In the longer term, it's going to be about earnings.
Yeah, so that's what I said. I mean, earnings are not going to be impacted for many companies. Even in the immediate 12 months, 18 months, the few companies where they have pricing power, they can hold on to gains.
So you're saying no excitement for the market?
No. It is very exciting. But it's exciting about, I would say my P multiple goes up, not the earnings.
But the P multiple has already gone up, to be fair here. And the P multiple has gone up post March 2014. Yeah. The fact that India is trading at a premium, it means that in general investors, they feel that the reform progress will be strong.
Yes.
So there's nothing new about a GST bill in terms of P pricing.
Yeah, between yesterday and today, there's nothing. I mean, yesterday probability of GST coming, say day before, probability of GST coming, the moment Congress said that we are in, it shot up to maybe 99%, and that has become 100%. That's why market is not excited about it. But 15 days back, it was not 100%. It was maybe, in my mind, it was 70-75%. So today it is 100%, it's done. It's over. That buy on the rumor, sell on the news. So the rumor part was last 15 days, now sell on the news, so it's all done. Now I think BOE's cut in the rate is more important than GST immediately, because see, markets are not going to wait for 1 year for the 1 year after that earnings to come in, because now this is only a constitutional amendment. Actual counter of whether it is going to be 18%, 20%, they will have 3 slabs, or what is in, what is out. I think those details are going to come up sometime now they'll work it. In December, so we'll do a special show the day on which the bill is introduced, that these are the rates. Okay, that time we will know who is, I mean, how much is, we know sectorally today who are the beneficiaries and who are going to be, paying more. Like we all be paying, all the service guys will be paying 2%, 3% more. Yeah. So we are hit at one level. But say all this, I said logistic intensive companies like steel, cement, they will definitely be beneficiaries. But can they hold on to that gains? I don't think so. So on the whole, earnings calculation, I don't think, at least I personally don't think it is going to have much impact in the short term. But in the long run, operational flexibility, the convenience, the hassle of not doing any, those things will be there, and that will be anti-inflationary, and very efficiency gaining kind of a situation.
You think we are in a sweet spot right now? I think the answer is a yes. But
Yes.
the reason I'm saying this is because we've had 1 month, month of some bit of DI selling unfortunately coming in. Maybe people have redeemed. But monsoon is great. Earnings, though patchy, has been okay.
Yeah.
And now we have the biggest tax reform
Yeah,
as well.
see, you have the biggest thing is globally there is a complete search of yield. I mean, the $13 trillion is below, 10-year papers are below, and now government bond issuance is at negative interest rate. I don't know who's going to buy it. I mean, you had 2% yield, you buy into it and it goes into negative, that is one thing. But actually issuance at negative, so you are saying that fundamentally I'm not going to get any money out of it. So I don't think any pension fund or all, they'll be buying into them. I don't know who buys that. So there is a massive surge for the yield. So that's why you see all the bond issuances, even from say like Masala bond.
Yeah.
It got subscribed by 4 times. You saw yesterday one housing finance company did, there was a mad rush for the bonds. So this is what is happening. Now the overflow of that negative interest rate money is coming into emerging market, and it is going to intensify. So
flows have been okay.
Yeah.
But if I look at the environment,
Yeah.
zero interest rate regime has been there for about 12 to 18 months now. The fact that central banks are printing money, that's happening from half a decade now.
Yes.
But despite such a benign liquidity environment, emerging markets as an asset class in last 5 years, they've underperformed. It's
Yes.
not that all the global money has come to India and it has gone to other emerging markets.
Yeah, yeah.
So I buy your liquidity argument. But for the moment, it is not showing in asset prices.
yeah, so now see, the environment is benign. That doesn't mean that money will automatically flow. Now we have to create a conducive environment for that money to flow into equities or emerging market equities, particularly India. So here, what are the factors which can change the trajectory of earnings? Okay, so you have terrific monsoon after 3 years. It's so intense. It's really supercharged monsoon. Then you have, I hope that will have impact on the inflation with a gap of 2-3 months. Then you have now this all the policy paralysis of 10 years have been all cleared up. I think this is the last piece of legislation. There is nothing left on the table of Lok Sabha and Rajya Sabha, which is a huge achievement. I mean, yesterday finance minister cut cake for, I mean, very unusual, you know. It's like a new birthday for him. So it is such an event. So it's not about the act. The issue is that now the whole country has come up to, push the legislation. So my sense is that there are too many good things now. So market most likely is not going to go down much. Upside, I don't know, because unless earnings come or something else comes in, it is going to be tough. I mean, somebody starts buying madly, which is not looking to be like that. But the companies which are doing well, there won't be any dearth. In fact, there will be violence to buy those companies, whichever shows earnings growth. You might have seen this season.
Yes.
Wherever earning surprise is there, the buying surprise is 10 times bigger than.
Absolutely.
So, that's what is going to happen.
Yeah.
And that's where you have to position your portfolio ahead of time.
Raamdeo, it's clearly a frenzy out there, but let me talk about some of the disappointments as well. And you've been extremely gung-ho about aviation, and that also is an extension of consumption.
Yes.
But the earnings, because of
Didn't
the
come.
price war in the sector, have disappointed the street.
Yes.
Have you changed your thought on aviation? Because
no.
you've been a large propagator of
Yes.
aviation as a theme.
Yes, so I'm also learning. And
That's a telling statement.
yeah, I'm also learning, and I'm as much disappointed. In fact, I wanted 50 crores more than 640, which was last year's number. It came exactly 50 crores lower. So clearly, I mean, we don't have the grip of how the industry works. So obviously,
But
when
is that position giving you sleepless nights? Are you thinking
no,
twice?
there's no sleepless
Your
nights.
investment thesis is still intact.
Listen, see, when you run a portfolio of 18 companies, one company or two companies will always disappoint. There will be, same day we had Bajaj Finance, which went up by 10%, and same day we had a 10% decline. So it doesn't matter. So that, as far as the management, this happens. Infosys went down by 10%.
No, I'm not talking about the price action.
Yeah.
I'm talking about when you invest. What
Yeah.
you've always explained to our viewers is that
Yeah.
you have an investment framework which
Sure.
is in place. And once that investment framework is broken,
It is not broken.
Yeah, so your
Framework is not
investment
broken.
framework is not
We had
broken, is what
expected
I want to
certain
understand.
growth
Okay, fair
of
point.
QGLP. Quality still stays where it is. G, is not turned out to be the way we had thought, but it's only one quarter. Okay, numbers are not that bad. The issue is that when you compare with last year's Q4, which is 15% net margin, this year it is 12% net margin. So 12% net margin is damn good, but it's not
It is
as
not
good as
great.
what we're thinking, you know, with 25%
But
more
you still
traffic.
have conviction and you're going to wait it out, is what you're saying.
Yes, we are going to wait it out, but the super conviction which I had, that definitely is diminished.
Okay.
What about the other one, Bajaj Finance? I mean, I know you must be extremely smiling when the stock jumped up 10%, but does it seem like this frenzy is not really good? Or, I mean, is it getting toppish anywhere? Or do you think this is now when the story is just started?
See, as I said, don't come in front of running truck. This is a huge truck which is going at a full speed. Don't apply your, this valuation method. Let the truck slow down or let it come to a stop, then we'll think of getting out.
But has
Let
the
the
truck
growth phase,
just
see.
about caught speed?
Yeah, I mean, it is at a speed. I mean, it is speeding for last 5-6 years, 3 or 4 years. So, right now the truck is at full speed. Don't come in front of it. This corporate is well managed. It has big opportunity and it will slow down. I mean, it cannot go on at this pace. When it slows down, then that will take our call.
I have a couple of questions, Raamdeo. One is, and you may avoid talking about your own firm, obviously so.
Yes.
But the diversified financial companies which have this broking arm to themselves,
Yes.
which was earlier a very integral part,
Yes.
now a small part because a lot of other things have come to the fore. The reason I'm asking this to you is because we had a management the other day saying that the total AUM of the NBFCs is just about scratching the surface of the AUM that banks have, and they have a long way to go. Do you think this growth rate for the other NBFCs also is just about starting and people shouldn't worry about the kind of run-up that we've seen there?
See, you are saying that some of the NBFCs are growing very rapidly.
No, they have run up a lot. The valuations that are being assigned to them on a price to book are sky high right now. Is that a worry, or do you think the earnings will catch up?
See, I don't worry about the companies which I don't have in my portfolio. Okay, very clearly. I mean, there are a lot of, every company is not in the same boat.
Sure.
There are some companies which are manipulated, the stock might be manipulated, the earnings may not sustain, it might be a low quality and high growth. I don't look at low quality, high growth. I look at high quality, high growth. So there the multiples can be very high. And say like, at one point of time, Group Finance, we made a lot of money in that, and the price to book went to 14. I think still it must be 10 or something like 10, 11, 12.
Some time-wise
Okay.
correction and growth,
It
so
must,
maybe 9-10
a
times.
lot of companies, they struggle to get P multiple of 14. This company was trading at 14 price to book. I think this must be the
But Raamdeo,
most.
that's because they never diluted.
Yeah, no, it's not about that only. See, look at, they earn 30% ROE, they pay out 30%, they grow at 30%. I mean, they deserve to get 30, 35, 40 P. But market does overdoes in terms of their exuberance, and they took it to maybe little higher, maybe 45, 50 P. And that gave that 12, 14 price to book. So clearly for that, they are waiting for that 1 year cooling off. Because earnings are growing, so value keeps growing at a pace.
Sure.
Price doesn't have to, because for value to grow, earnings have to grow.
Sure.
Earnings can grow at a particular, some sensible way.
Sure.
25%, 30%, 40%. That itself is very tough to sustain. But price, I mean, some mad guy comes and says that I want $100 million worth of stuff. In one day you shoot up by 20%.
Sure.
So you can, what company takes 1 year to grow, you can grow it in the marketplace at 1 day.
Having
So
said
is
that,
there I was wondering, is there a temporary mismatch for United Spirits as well? Because that is again, I think a theme that you probably used to like sometime back.
I still like.
But it's, somebody is disliked it because it's trading at fresh lows.
That's okay.
What's gone wrong here to your mind? Or what is something that the market is not recognizing?
So see, you must always figure out difference between the value growth and price growth.
Right.
What is the troublesome is, not to your liking, is the price is coming down.
Yes.
Okay, that is, but value is going up. Value is going at, see what the management can do. They can take all kinds of right action, and they can, whatever premiumization they are doing, whatever volumes they are pushing, whatever brand positioning they are doing, renovation of the new brands which is happening, everything is happening. But market had, in their own wisdom, they had taken it to 4,000 rupees. So that is coming down to wherever it is the right price, right value. But on a 10, 15, 20 years henceforth, I see this franchise to be very, very strong and very rewarding to the investors.
How are you positioned within IT, wherein Infi has disappointed? On the other hand, HCL Technologies is emerging as the winner when it comes to earnings. Or do you still find comfort in the mid caps, the Tata Elxsis of the world, which could be a large cap sooner or later? I don't know.
So in large portfolios, what happens is you like something, you develop the story, you work with the management, work with the spreadsheet, and then you take a position. Okay, say like Indigo, we took a position. Now then the story starts happening, and stories 80% time it works around the way you thought, 20% time it doesn't work. So then you have to rethink what to do. Then you reposition the portfolio. But the broader theme doesn't change. Pharma, IT, consumer, private sector banks, good NBFCs or some specialized monopoly company. That's how the portfolio looks.
Raamdeo, always such a pleasure speaking with you. Thanks much for taking the time out and joining us today on the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.